everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are several things to pay attention to for the upcoming trading week. Now, this week is going to be even more exciting than last week. And how is that possible, you ask? You're like, Merlin, we had almost a 5% move up in the NASDAQ last week. We had Microsoft, we had Tesla reporting earnings, we had Intel. These are juggernauts out there. We had core PCE price index on Friday, which was a little bit elevated. We had durable goods orders, which looked great. We had GDP number, which was looking really good. How can you top that? Well, buckle up, everybody. Let's get started on how exactly I'm going to top that. Now, this week we start things off with earnings. There are 531 companies reporting earnings this week. Monday is a little bit of a slow start. You've got Whirlpool and Principal Financial Group. The reason that's important is, remember, those durable goods numbers came out really good, and Whirlpool sells a lot of durable goods, washers and dryers, etc. So let's move on to the bigger stuff. Tuesday is a big day, probably the second biggest day of the week, with AMD, Pfizer, Caterpillar, General Motors, UPS, Electronic Arts, and McDonald's. And remember, Intel did not report great earnings, and we'll see if AMD follows suit. Now, it's not exactly the most exciting on Wednesday, but there are some big names there. Altria, Align Technologies, Metropolitan Life, Waste Management, and Humana. Now, the drum roll, please. Dun, 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 dun. The fireworks will be going off on Thursday. This is probably the biggest day of earnings season for the next couple of months. It's a monster, a juggernaut, a behemoth. What do we have? Apple, Amazon, Google, Qualcomm, Ford, Bristol-Myers Squibb, and Starbucks, and there's many more. But the reason I'm putting this explosion around it is the sheer power of those first three companies on Thursday. Apple, Amazon, Google, better known as Alphabet nowadays, is about 26% of the NASDAQ 100. Just those three companies is actually over 26% of the weighting of the entire index. So if any one of those has a horrible day, we could see that NASDAQ come crashing down, and vice versa. If those earnings come out stellar, you could see NASDAQ soar. So be very careful on Thursday. Those are all reporting after market, so grab your popcorn and enjoy the fireworks that's probably going to happen after the market on Thursday, leading into a colossal Friday trading session. Now, Friday has some earnings of their own, but it's Cigna and Regeneron, so not the greatest names in the world, but there might be in your portfolio and maybe some movers as well. So earnings, I'm excited about it. This is going to be a biggie. Now, what's more powerful and exciting than Apple, Amazon, and Google reporting earnings? I can tell you, it's got two words to it, and he always looks really smug. Jerome Powell. Central bankers, the Federal Reserve. That's right, we were all anticipating the Fed announcement, which is going to be happening this week on Wednesday. So let's dive right in, tell you the times and why it's so important. Now, as we mentioned, the rate statement will be coming out Wednesday at 2 p.m. Eastern Standard Time. At this moment in time, they're expecting a 25 basis point increase from 4.5% to 4.75, which is a good sign, I guess, because they're lowering those rates. It was 75 basis points and 50s, but really that's priced in already, and I'll show you that in just a second. What's more important is really going to be the press conference itself. What does Jerome Powell say when he gets grilled by all the media? That happens at 2 p.m. Eastern Standard Time. Now, the recommendation here is simply be extremely careful, if not totally out of the market, between 2 p.m. and 3 p.m. Eastern Standard Time. Why? Risk management. You just don't know which way these markets are going to go. And he could say something which causes a dramatic move, a very sharp swing, and honestly, even if he doesn't say anything dramatic, you usually get wild swings in the market at that moment in time. So if you're a short-term trader, there may be opportunity, but there's also significant risk. Now, this 25 basis point increase that is expected is already priced in. I will show you the Fed funds futures here. Going into the weekend, there was a 98.1% probability that we were going to see a 25 basis point increase. That's that big blue bar you see there. Notice to the right of that, though, there still is a smidgen of hope, 1.9%, that we could actually get a increase of 50 basis points. But let's just call that a slim chance. And technically, there actually was a very, very small probability of getting no increase at this meeting. Now, I don't think that's going to happen. I think we're pretty much locked in at 25 basis point increase, but it will be interesting during that press conference. Does he signal potential stoppage of raising rates here at the next meeting, or maybe even the one after that? Very important for the markets. Now, it's not just about the US. We talk about central banks all the time. There's other central banks around the world which will be reporting. So let's take a look at some of the other banks. The Bank of England is expected to go from 3.5% up to 4%, so a 25 basis point increase there. That's going to happen Thursday at 7 a.m. Eastern Standard Time. And moving across the pond, we have the EU main refinance rate, which is also expected to jump 25 basis points from 2.5% to 3%. That will happen Thursday at 8:15 p.m. Eastern Standard Time. Now, let's look at one other factor. I've been kind of hammering this point a little bit because Jerome Powell, when he was at the Jackson Hole Symposium, was talking about the unemployment number is going to take a hit. He's like, it's going to get bad, expect some pain, right? He kept saying, expect some pain. And I think the media and the U.S. was like, uh-oh, this is not looking good. So now's our chance to see, is this job data really having an impact, right? Are we starting to see the impacts from these raising rates at the bottom line employment? So let's take a peek at the jobs data coming out for this week. And there actually is quite a bit. Friday at 8:30 a.m. Eastern Standard Time, we have, drum roll please, average hourly earnings. You have non-farm employment change, and you have the unemployment rate, a trifecta, if you will. Now, to put it into perspective, what's going on with the unemployment rate? Based off what Jerome Powell has been saying, you would expect it to be rising. Well, this goes all the way back into 2020 when the pandemic hit. You know, we were up over almost 15%, and now we are stuck right around 3.5. Now, we have been moving up and down about 0.1%. Which means it's gone from 3.5 to 3.4 to 3.6 and really kind of bouncing. But you don't see any dramatic spikes there on that chart. It really seems to be flatlining. So the expectation is that there will probably start to be slightly higher unemployment. But let's be honest, even if we got back up to 3.6, 3.7, 3.8, that's not that bad. If we start to get up to 5, 6, 7%, that could really have an impact on our economy. Now, that said, the time that those announcements come out will be 8:30 a.m. Eastern Standard Time, which is 1 hour before the equity markets open. So fortunately for us on Friday, that will already be priced in when those markets open. So a lot of volatility, a lot of Fed announcements, and some tremendous earnings announcements coming up this week. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.